So we're excited about bringing this information to y'all, and we'll be bringing it out, updating every week for different submarkets of the Greenville and the upstate area. And so very excited about bringing this out to all of you and letting you have an opportunity to learn this and, you know, even see where kind of your market is at. Really excited about being able to do that for you. We've taken a lot of time over the last while and putting this information together to make sure that you have the most updated information. Let's see here. Doesn't look like y'all can see my screen. Yes, there you go. Okay, looks like you can see me and my screen now, so it looks like we are good to go. All right. So, ladies and gentlemen, my name is J. Michael Manley. I'm with the J. Michael Manley team at Keller Williams Greenville Upstate. I'm excited to be bringing you an update to what's actually going on in the Greenville market, and so that you can have this opportunity to understand what's going on with your home, what's going on with your own values, those kind of things. So as we go through this, you know, please feel free, ask questions in there. One of my agents, if they're online, they will actually answer some questions for you right now during the presentation, or I will answer them for you after the presentation. And so as we're going through this, this is just kind of going, what's going on with our real estate in the Greenville area post-COVID, or, you know, technically still within the COVID world of what we're going on. So let's just kind of give you an update. Let's start here with the shelter in place. So when shelter in place went into effect, it actually went into effect on March 15th here in the state of South Carolina. You can see that, did it affect us? Not really, like not a whole lot. We were already on pace in the first 15 days of March to really crush, you know, what was going on in the market and crush 2019. So yes, the market did shift downwards from March 15th to March 31st, yet it was already burning up on that, you know, March 1st to March 15th. The amount of homes that were going under contract, the amount of properties that were closing, it was on fire. And so it was doing really well. So you can see in March of 2019, we sold 1,214 homes for the entire month. March of 2020, we actually sold 1,330 homes for the entire month. The majority of those, in all honesty, did schedule to go under contract before the shelter in place order went into effect. And so when you look at that, you go, well, that didn't affect much at all. In March, most of those properties that were closing were already under contract, so it really did not affect it much. Now let's come over to April of 2020 and show you the difference between April of 2019 versus April of 2020 and what happened there. So April of 2019, we sold 1,281 homes. So good, strong month for us in the upstate in Greenville County and the Greenville Multiple Listing Service. Yet in April of 2020, it did fall. It fell to 1,108 homes total. So when you look at that, you go, well, J. Michael, that is a decrease. Yes, it's a decrease of about 14% year over year, and month to month, March to April, it's a decrease of about 17%. So yes, the shelter in place order did affect the real estate market. Now, that does not tell the whole story, because the next story is what happened to pricing during that time. Well, during the shelter in place order, you can see that in March of 2019, the average sold price of a property was $237,981. Yet the average sold price in March of 2020 was $263,155. So well over a $20,000 increase in the average sales price during that year. That's a pretty strong market. You go, well, did that affect what was actually going on in April when we started really seeing the effects of COVID? Well, we go over to April. We look at April. In April of 2019, the average sales price of a home was $249,952. The average sales price of a home in April of 2020, $258,432. So did it affect? maybe, yet prices were still increasing over 2019 numbers. So again, very strong, did really well, even though the total number of home sales dropped 17% over March, the home prices still were increasing to a point, right? Especially over 2019. So let's just kind of talk about what was actually going on there. Did it affect? Yes and no. It didn't really do that much of effect. Now, when we go through that and we say, okay, what are some of these underlying stories of what has happened to the real estate market during this time? Well, let's just take a look at that. You know, there's a company out there called Showing Time that we at the J. Michael Manley team use to book all of our showings for all of our listings. Many other companies in the upstate use Showing Time as well. And they have the most data of any company nationwide on people actually viewing homes, because you have to actually call Showing Time and book an appointment with them to be able to go out and see a property that's listed with the multiple listing service. So they actually track all of the showings for the entire state. They track them for the entire country. Yet what I've got here is the showings for 2019 versus 2020 for the entire state of South Carolina. And the first piece that I desire for you to look at is that you can see that in January, we were having more showings than in 2020 than we were having in 2019. Meant the market was going to be better. That was until right around February the 1st. February the 1st, there was the day before on January the 31st, there was a travel restriction that was issued for China. It caused people to wake up and say, whoa, wait a minute, what's going on? Why are we restricting travel from other countries to America? Is this thing happening? What's going on? And you can see that actually caused a little bit of a dip in the total number of showings that were occurring. You go, J. Michael, I don't know that when you look back through the news, there really isn't any other news that was occurring that would cause that to drop. Now, let's say, okay, well, we started to come back up and we met on February the 23rd. And then on February the 24th, you start to see a downturn again in the actual showing. So what actually occurred on February the 24th? Dow Jones actually loses 1,038 points in one day. Now, when that happened, people freaked out a little bit. Now, you can tell that they weren't completely freaked out because they were still out seeing properties. And so everybody's like, they're still seeing properties. They still want to buy homes. Yet people that may have not been risk adverse or may have had more cash in stocks and those kind of things, they may not have been looking for properties any longer, and it started on that day. Now let's come over to the next kind of, the next piece that kind of affected is that we go to March the 11th. You can kind of see how after March the 11th, the market, as far as the number of people out looking for properties, starts to fall off a cliff. Now, what happened on March the 11th? The NBA has suspended their entire season. Now, I know for me personally, that's when I got a big wake-up call. When the NBA, with the amount of money that the NBA generates, and as it was going into the playoffs and those kind of things, the NBA to suspend the rest of their season, it meant that we needed to take a look at something. Something was going on. And you can see that it was shortly thereafter on, right around March the 13th, the governor said that there's going to be no more public schools in Kershaw County and no more public schools in Charleston County. And then it was 2 days later that the remaining part of the state followed suit and canceled school for the remaining year. Now you look at the showings, they completely fell off. I mean, just completely fell off. And they continued to fall off all the way until they reached this point right here. Well, ladies and gentlemen, that point is Easter. So on Easter Sunday is the lowest amount of showings that we have had in all of 2019 and all of 2020. You can see that on Easter Sunday 2019, showings did drop. We would expect that. People were eating dinner with their family. They're not going out and spending their time with a realtor. They're not going into other people's houses on Easter Sunday. And so it dipped. We would expect to see that. Yet what happened on the Monday after Easter I don't know that anybody could have predicted the date that it was going to happen, and yet it did. On the day after Easter, that Monday, what ended up happening is the market, the total number of people looking for homes started to increase. Ladies and gentlemen, that's great news, is that buyers are returning to looking at homes at a high level. Now you go, well, J. Michael, where are we at today? It doesn't look like those two numbers have crossed. They have not. We have not gotten back to that 2019 number. Yet what we have gotten is we've gotten to 16.4% of that number, meaning that for the total people that were looking at properties in the state of South Carolina in 2019, right now in 2020, we are only 10 or 16.4% off of that number. And I look at this and say, you know, the market or the shelter in place hasn't even been fully lifted. You can't go to a spa. You can't eat within a restaurant inside a enclosed dining room. And so I would say that, you know, the shelter in place, in all honesty, is still here. And yet we are already back to within 16.4% on the showings. And I look at that and go, that's pretty strong. I mean, that's an amazing testament to the people that really desire to purchase properties. So some of you are like, well, what's going to happen in the future? You know, there's a lot of stuff going on out there. Are we going to see a crash like we saw in 2008? Well, let's kind of break down some of that information. You know, I don't personally believe we're heading to a crash like we saw in 2008, and I'll give you the information why. Number one, a lot of people are like, well, there's all these people that have gotten a forbearance on their mortgage. Well, according to Black Knight, which they're an MLS provider and those kind of things, they estimate that approximately 8.9% of all government-backed loans are in forbearance. Now, that's a lot of loans. Don't get me wrong. I get it. That's a lot of loans. And yet 8.9% of those loans being in forbearance. Now, I know all my realtor friends are going, J. Michael, forbearance is not a good thing. And I get it. It's not a great thing because the mortgage companies with a forbearance, what it actually means is that they are just forbearing their mortgage payment until a particular date. That's about 6 months. Now it's about 5 months away, which means that all of those mortgage payments are going to come due in 5 months. So if your mortgage payment was $1,000 a month and you had forbearance for 6 months, that means in 6 months, you're going to owe $6,000 to your mortgage company. Now, don't let that scare you because some of you that may freak you out. You're like, oh no, I'm going to owe this amount of money in 6 months. Yes and no. The investors that actually own these mortgage-backed securities have hired Bank of America, Wells Fargo, these companies to service their loans, Penny Mac, whoever is servicing your loan. They are servicing your loan for the mortgage-backed investor. The mortgage-backed investor issues guidelines and says, these are all that you can do to help these people. Well, those investors have said, all you can do is what the government has required us to do, forbearance for 6 months. Now, that means that if you called your mortgage company and you said, hey, I need a forbearance for 6 months and it's a government-backed loan, you can pretty much ensure that you could get that if you can prove a hardship. Now, come back. In 6 months, are you going to owe $6,000 if your mortgage payment was $1,000? Maybe, yet maybe not. What you can do at that point is you can call your mortgage company back and start to work with them. There's options out there where you can take all that $6,000, tack it onto the back of the loan and continue to pay normal. There's an option where many of them will probably desire to go out there and take that $1,000 or that $6,000 and spread it out over the rest of your mortgage payments, that kind of thing. So there are some options for people. And you go, well, and J. Michael, what's going to happen if all these people can't pay that money? That's a lot of 8.9% of all loans out there coming back on the market. That could be huge and detrimental. Well, the good news is that we have been in a low inventory market for a while. If you've been out there shopping for homes, you know that there's multiple offer situations. You know that the homes that are priced under $250,000 are moving really, really quickly. I mean, we're even back to multiple offer situations, you know, for properties that are under 200,000. So as we're looking at this and we're looking at forbearance, we're all home. We're still sheltered in place with our kids. So forbearance and deferment. The deferment means that you have pushed your mortgage company and they have said, hey, you don't owe us any payments for the next 6 months. And only thing that's going to happen is that you're going to, the interest on your loan is going to continue to accrue. All right, so that really, there's not a lot of deferments out there with these mortgage companies. The majority of them are forbearances. Now, if you have a forbearance right now, I'm going to ask that you go to ilovegreenville.com, and that's L-U-V, ilovegreenville.com. And we've got tons of information out there for you. There's even a helpful booklet with tons of resources of who you can contact and how to get help and state resources that you can actually download on there that can help you get through this forbearance situation and those kind of things. So what we're looking at is go to ilovegreenville.com. We've got free information out there for you. So you go, Michael, well, why isn't it 2008 all over again? Well, here's why. Up to 2000, 2001, 2002, 2003, 4, and 5, homes were appreciating at an astronomical and an unsustainable pace. You can see that in 2004 and 2005, we reached as a nation 12% and 11% appreciation in 1 year. That means that if you had a $100,000 house, it was now worth $111,000 in 1 year. Well, since 2014, we have averaged approximately 4.8 to 5.5% of appreciation. And ladies and gentlemen, that's much more sustainable in a market that's much more sustainable than 11 and 12%. Now, here's the next part of this is that it gets really cool because the total number of equity that has been cashed out of homes right now is much less than what it was back in 2008. You can see that in 2008, there were $824 billion that people had in equity in their homes that they had cashed out, meaning they had gotten a HELOC loan or they had gotten a home equity line and using that money to do other stuff to their home. Maybe put a screen porch on, maybe a lot of them pay off cars, those kind of things. Well, that's not occurring right now. And that, again, is a great thing because right now, the amount of equity that has been cashed out of the market is that approximately $232 billion of equity versus $824 billion back in 2008. So ladies and gentlemen, that's a huge difference, meaning many people have a lot of equity in their home. Let's just see how much. 37% of all homes in America, ladies and gentlemen, have been paid cash for. They're paid off free and clear. Either they paid cash for it or they have paid their mortgage. So 37% of all homes out there are paid off. They don't owe anything on those properties to a mortgage company. 26% of all homes, so 26.7% of all homes out there actually have more than 50% equity in that house. So you're talking over 50% of all homes in the United States have more than 50% equity. Ladies and gentlemen, that's huge. That means that if there's somebody that still has a mortgage on their property, they lost their job and they're in forbearance, and this forbearance, when it comes up and they can't pay that $6,000, that means that they have equity in their home that they could actually sell it and get out from under it and avoid that foreclosure. That's pretty strong. So this is the number one reason why I don't believe that we're going to end up in that situation that we were in back in 2008. So as you're going through this, ladies and gentlemen, you might be asking yourself, is this going to be 2008 again? It's not. There's too much equity out there in people's homes that they will be able to sell those properties if they do get into a problem situation because they've lost their job or other reasons out there. So I don't anticipate an influx of 8.9% homes coming on the market in the next 12 months. So we look at this number and we say, that's a really good thing. And I think the market is going to sustain healthy because we have been in an over inventory, or excuse me, a reduction of inventory on the market with more buyers out there. And so as that has contracted, especially since the COVID-19 has happened, what's happened now is you're in even more inventory crunch. And so we can sustain an extra 1,000 homes coming on the market in the upstate to move forward. And, out of those 6%, roughly right now, owner occupied homes that are in the upstate or in Greenville County, it's approximately 189,000 homes that are owner occupied in Greenville County. And of those homes, if not all, 8.9% of those are going to come on the market in the upstate. So we're in a very good market moving forward. I know a lot of my investors that I've been speaking with, they go, we're waiting for the market. And I was like, I don't know that you're going to see the 2008 market where you can start snatching up a lot of properties at 50% of value. It's just not going to happen. There's too much equity in the market. So is this 2008 all over again? No. Plain and simple, it is not 2008 all over again. So, ladies and gentlemen, I hope that this has brought value to you. If you would like a copy of this PowerPoint presentation, we'll be more than happy to send it to you. You can take a look at it. Just drop your email information in the box below, or send us a private message. We'll get this out so that you'll have that. And then also, if you are in forbearance, don't hesitate to go to ilovegreenville.com, and that's LUV. And you can be able to download that helpful booklet that we put together that has all the contact information for the state and those kind of items that can help you keep from going into foreclosure in the future. So, ladies and gentlemen, again, we consider ourselves here at the J. Michael Manley team an ambassador for the upstate, and we just wanted to bring this information to help you and to bring some clarity on what's going on in the Greenville housing market. Over the next few weeks, we're going to be breaking down submarkets of Greenville County so that you'll have that as well, and look forward to helping you and bringing you this information and keeping you updated over the next several weeks, breaking down each individual submarket of Greenville. So love y'all. Again, J. Michael Manley, have a wonderful day. Be blessed and stay healthy.